Hello everyone, my name is Oliver from Lux Trading, and I'm sure that by now you've already heard about the situation with MyForexFunds, them having their assets frozen, and facing pretty serious allegations from the CFTC. MyForexFunds is, or shall I say was, one of the biggest prop trading firms on the market, offering traders to trade large funded accounts. We have expected the regulators to come knocking on some prop trading firms' doors for a while, and we've been warning traders to make sure to choose a reliable prop firm that is working with good business models, meaning an A-book model, for quite some time now. As you can see, I'm gonna post a few screenshots from our previous videos where we've talked about how important it is to actually choose a good prop firm for a trader. So this news doesn't really come as much of a surprise to us. In this video, we're going to look at the charges against MyForexFunds. We're going to talk about why it is happening, what is happening, and what you can do to make sure that you don't end up in a bad situation like a lot of traders did right now. So let's not wait anymore and let's get right into it. So why did it happen? For those of you who are not familiar with the situation, I'll quickly recap what has happened. If you're familiar, feel free to skip to the next chapter. As of the 29th of August, MFF had a statutory restraining order signed against them, freezing their assets and requiring all books to be submitted to the CFTC for examination. MyForexFunds has managed to convince 135,000 customers to sign up since November 2021 and turned over at least $310 million in traders' fees. Little did these traders know that there was a minimal chance of them succeeding. As stated by CFTC in their complaint filed before the United States District Court, MyForexFunds has claimed the fact that we only make money when you do, when in fact this was completely untrue. In fact, they are actually the counterparty to all trades taken by their customers, and they are alleged to have purposefully minimized the chance of customers being able to profitably trade on their challenge or funded accounts. This is achieved by terminating customer accounts, misleading advertisement, misleading trade commissions, and using custom software to make sure that the trades are filled with a bunch of slippage. That led to increased customer losses and decreased profits. Simply put, MyForexFunds was doing everything in their power to make sure that the traders are not making profits, they're not withdrawing money, because in their business model, every gain made by the trader is a loss for the company. They were essentially doing what we call B-booking with their clients. In the online prop firm space, there are fundamentally two business models. The first business model, what we call the B-book, run by firms like MyForexFunds, is essentially a Ponzi or a pyramid scheme, or pyramid-like scheme, however you want to call it. It is a business model where you need to get more fees in that you pay out. What it does, it takes the losing traders' fees to pay out the winning traders. In this model, the prop firm is taking the opposite side of the trade from their own traders. Therefore, they're creating a significant conflict of interest. The second business model, used by prop firms like us, is based on trading with real capital in real-life markets. All of the profits that are made by the traders and that are paid out to traders come from the traders actually making profits in the market, not from the prop firm taking the opposite side of their trades. Over the past year, we've been very outspoken about how important it is for a trader to make sure that they're trading under the A-book model, because then their interests are actually aligned with the prop firm. That is because the B-book model operates like a casino. Whatever the trader makes, the prop firm loses. That unfortunately gives the prop firm a reason to stack the odds in their favor. Thus, such prop firms, like MyForexFunds for example, need a constant flow of new traders to pay out the profitable ones. In fact, profitable traders are causing firms like MyForexFunds quite a significant loss, as they're not able to make money from those winning traders. This is where manipulation comes into this Ponzi-like business model. To increase profits for the company, they require traders to be purchasing more fees, more valuation accounts, and having less and less withdrawals. That is why MyForexFunds was allegedly manipulating spreads for their traders, making sure that they get filled at a worse price than they were supposed to. They're also allegedly misinterpreting or misrepresenting their commission structure, therefore clients have been charged more than they were supposed to. All of these are potential ways for the firm to increase their profits. This business model is extremely unethical, but unfortunately used by most proprietary trading firms in the industry today. The important thing to keep in mind is that while all of this was happening, while the B-booking was happening, while increasing the slippage on trades was happening, while misrepresenting traders' commission was happening, the firm was putting up a clean and responsible front. They were saying that the traders' trades were going into the live market. That is why I urge all traders to do their research before they start trading with a prop firm. Don't just believe whatever you're told, but ask for proof. As we've established so far, B-book kind of prop firms require a constant flow of new traders to keep their head above the water. Just a few big withdrawals at the same time can make a firm collapse. But MyForexFunds are not the only prop firm operating with this sort of business model. This need to get every trader to survive creates an insane level of competition and a self-destructive cycle between these kind of companies. They will do anything to get the fees and to make sure that traders are not winning. Therefore, their rules get easier, the risk management gets looser, the profit splits get higher, and that results in more traders passing the challenge. We've seen in previous years that the success rate was much lower than it is today, which means that there are more and higher payouts than there were before. That brings us back to the firm needing more fees to come in to be able to sustain these big withdrawals. And to get more traders to come in and to be able to pay out more withdrawals, they once again make the rules easier, make the profit splits bigger, and I hope you can start to see the cycle of doom here. So, how do you avoid this model when trading with a prop firm? The best way to reduce your risk when trading with a prop firm is to make sure that you're trading with a prop firm that exclusively trades with real money. Those are the A-book prop firms. Many of the largest prop trading firms in the industry are using the same Ponzi-style B-book model just like MyForexFunds. And it's only a matter of time before many of these companies are gonna get a knock on their door just like MyForex did from regulators. The only way to reduce your risk is to trade with a real money A-book prop firm. Wadelux have been vocal about this for a very long time, and we pride ourselves with trading exclusively with live money, with real money, with an A-book model in all our live account stages. We are not B-booking our traders, and all of the profits that traders are paid out come from the market. But I just told you, don't just believe whatever you said, ask for proof. So here, you can see our letter from our broker confirming that indeed all of our live accounts are an A-book model funded with real live money, and they are sending all of the orders directly to the market. This means that our risk management has to be stricter than most firms. And when you're trading with real money and an A-book model, it's difficult to be profitable because when a trader loses money, we lose money. Therefore, we need to make sure that we only let those really good traders trade our capital, and that is a time-intensive and cost-intensive process. But we believe that this is the only way for the prop firm industry to go. We need the transparency for our traders, and this is the only way to make sure that the interests of the prop firm and the traders are aligned. It's when you are A-booking your clients and you're sending the orders directly to the market. If you B-book your traders, you're making yourself their opponent, which I believe is unethical and wrong. Therefore, at Lux, we always have and always will only trade with the A-book model, even if it's more difficult. And to finish this video, I'd like to leave you with one very important message. Choosing realistic timeframes, profit targets, prop firms, and trading is much better for you in the long run. While the attractive rules of the B-book prop firms promise a lot, they don't stick around. Those kind of firms come and they go. It's much better to slowly build your bank up, but make sure that it stays there. Thank you for watching this video. If you want to get in touch with us, feel free to leave a comment down below the video. If you like the video, don't forget to like, share, and subscribe. Mine has been Oliver. Thank you for watching and have a great one.